Texas offers one of the most business-friendly tax environments in the United States, especially for limited liability companies. If you own or are planning to start an LLC in Texas, understanding the state's unique tax structure is essential for compliance and maximizing your tax benefits. Unlike most states, Texas does not impose a personal income tax, which creates significant advantages for business owners. However, Texas LLCs must still navigate several important tax obligations, including the state's franchise tax system. The franchise tax is Texas's primary business tax, applying to most LLCs operating in the state. This tax is capped at 0.75% for most entities and 0.375% for retail or wholesale businesses. The good news for small business owners is that LLCs with revenue below $2.47 million in 2024 are not required to pay the franchise tax, though they must still file a no tax due report. Filing requirements for Texas LLCs include an annual franchise tax report due by May 15th each year. This report serves a dual purpose, as Texas does not require separate annual reports to the Secretary of State. Instead, the franchise tax report includes the information typically found in annual reports. For smaller businesses with revenue under $20 million, Texas offers the EZ computation method, which applies a reduced tax rate of 0.331%. While this method simplifies calculations, it does not allow for deductions that are available under the standard method. When calculating franchise tax using the standard method, LLCs can choose to deduct either the cost of goods sold, compensation expenses, or a standard 30% of revenue. This flexibility allows businesses to select the most advantageous deduction method for their specific situation. Beyond the franchise tax, Texas LLCs that sell taxable goods or services must collect and remit state sales tax. The base rate is 6.25%, but local jurisdictions can add up to 2% more, potentially bringing the total to 8.25%. To comply with sales tax requirements, LLCs must obtain a Texas sales and use tax permit and file regular sales tax returns. At the federal level, Texas LLCs follow the same tax rules as LLCs in other states. By default, single-member LLCs are treated as sole proprietorships, with income passing through to the owner's personal tax return. Multi-member LLCs are typically taxed as partnerships. However, LLCs can elect to be taxed as either C corporations or S corporations by filing the appropriate forms with the IRS. Choosing corporate taxation can offer strategic benefits depending on your financial goals. C corporation election subjects the business to the federal corporate tax rate, currently 21%. But allows for certain advantages regarding reinvested earnings and fringe benefits. S corporation election maintains pass-through taxation while potentially reducing self-employment taxes for owners who pay themselves a reasonable salary. Texas LLCs can reduce their taxable income by deducting qualified business expenses. Common deductible expenses include business insurance premiums, office rent and utilities, marketing costs, professional services, business-related travel, equipment depreciation, and employee wages and benefits. If your LLC has employees, you must also comply with employment tax requirements, including withholding federal income tax and paying state unemployment tax. Some cities in Texas may impose additional local business taxes or licensing requirements depending on your industry. The absence of personal income tax in Texas creates a favorable environment for LLC owners, as they only pay federal income tax on their business profits. This tax advantage is one reason many entrepreneurs choose to establish their businesses in the Lone Star State. Maintaining accurate records and staying informed about tax deadlines is crucial for Texas LLC owners. The primary franchise tax filing deadline is May 15th annually, and missing this deadline can result in penalties or even the forfeiture of your business's active status with the state. Understanding Texas LLC tax rules may seem complex, but proper planning can help you minimize your tax burden while maintaining full compliance with state and federal requirements. For many business owners, the tax advantages of operating in Texas make navigating these requirements well worth the effort.